we're about to go back into overdrive as the US fourth quarter reporting season starts in earnest on Tuesday the 14th of January, when American megabanks JP Morgan Chase, Wells Fargo and Citigroup all announce their results. They should also provide useful insight into what's going on in the world's largest economy, where we'll also get three handy macroeconomic data points in the coming week. The first, well, that's the monthly US smaller companies Optimism index from the NFIB on Tuesday the 14th. Smaller firms, well, they're more likely to get the bulk of their business from their home market, and the signs here have been encouraging of late. The latest NFIB reading was 104.7, only a few points below August 2018's all-time high of 108.8. The second data point, that's the monthly National Association of House Builders, or NAHB, Housing Market Index, due on Thursday the 16th. This dipped badly in 2018, rallied strongly in 2019 and ended the year at 76, only a fraction below its all-time high of 78. As we can see in both cases, the US stock market pays attention, and investors with exposure to US financial markets will also read the third data point with interest. This is the so-called Beige Book on Wednesday the 15th, the first of 8 editions this year, and it features anecdotal evidence from all of the regional Federal Reserve banks on the US economy. That will help to set the tone for the Fed's first policy meeting of the year on the 28th and 29th of January, although the US Central Bank's current plan is to keep interest rates unchanged at 1.75% throughout the year. Now, on this side of the pond, news flow will also start to pick up again. Around half a dozen FTSE 100 firms are due to release trading statements or results or host an analysts meeting, and plenty of mid and small cap names will be updating their shareholders too. They include, among others, Miner for Expo on Monday the 13th of January, recruitment giant Page Group and specialist retailer Games Workshop on the 14th, WPP and a pair of house builders Persimmon and Vistry, which used to be known as Bovis, on the 15th, Primark owner Associated British Foods, Whitbread, Rio Tinto, retailer Halfords and another recruiter Hayes on the 16th, and then Experian on Friday the 17th. But the biggest source of fuss in the week ahead could be a full year trading update from another house builder, Taylor Wimpey. That's due on Tuesday the 14th of January. The firm should provide some insight into the UK's housing market and the wider economy, while from a wider stock market perspective, it's currently the second highest yielding stock in the FTSE 100, according to analysts' consensus forecasts, trailing only Imperial Brands. As we can see here, the shares have done well over the past 12 months, buoyed by that yield, of which more shortly, persistently low interest rates, and hopes that the Boris Johnson-led Tory government will act to support the housing market, possibly in the form of lower stamp duty. Now, when it comes to the trading statement, analysts will look towards 4 headline figures. The first two, they are completions and average selling prices. In 2018, Taylor Wimpey completed 15,275 houses at an average price of £302,000. Both are probably marginally increased in 2019, and watch out for any guidance for 2020. Also look out for any comment on profits. Analysts are looking for a pre-tax income of £820 million, a fraction above £811 million in 2018, helped by increases in volumes and prices, and a slowdown in cost inflation in the second half of 2019. Should CEO Pete Redfern make any comments on the 2020 outlook, bear in mind that the consensus forecast is currently for a flat pre-tax profit of £820 million. Finally, analysts will be watching out for reaffirmation of the company's cash return policy. Taylor Wimpey is looking to return over £600 million to shareholders in 2019. That equates to just over 18p a share in dividends, and it's that sum which underpins the double-digit dividend yield on the stock. Shareholders will also be looking toward Mr Redfern for any forecasts on cash returns for 2020, as the builder had a net cash balance sheet at the end of last year, 2018 at least, to the tune of £644 million. Thank you for watching, and I look forward to seeing you next time.